Usually, when you look at a used car lot, you see a pretty straightforward transaction. Just metal, rubber, depreciating under fluorescent lights. You pick a car, you pay, and you drive off.
Right. It's a very physical, highly visible retail business.
But what happens when you take that simple car lot, inject it with billions in venture capital, and then crash the valuation by 75%? Welcome to today's deep dive. We're looking at Kavak, Mexico's first unicorn startup.
Yeah, and it's been a wild roller coaster.
Totally.
Yeah.
I mean, they rocketed to an $8.7 billion valuation, crashed hard by 2025, and now, as of April 2026, they are completely reinventing themselves. And here's where it gets really interesting. Kavak isn't actually the type of business it appears to be.
Not at all. And, that flip business model actually grew out of a massive failure. Back in 2016, Kavak set out to fix the Mexican used car market.
Which was mostly informal back then, right?
Exactly. Something like 80% of sales were informal. People dealt with fraud, fake documents daily. So Kavak promised this solution where they buy, fix, and sell with a guarantee.
Makes sense.
Yeah, and when the pandemic hit, cheap venture capital from funds like SoftBank just flooded in. They expanded globally. They sponsored Formula One driver Checo Perez and, hit that $8.7 billion peak.
But then the macroeconomic environment shifted. Between 2022 and 2024, interest rates spiked.
Right, and because Kavak relied on that cheap VC money to actually buy those thousands of cars, the moment rates went up, the cost of holding that inventory suddenly became higher than the profit they'd make actually selling it. It fell straight into the inventory trap.
I mean, it's basically like buying thousands of smartphones, right? Every single day they sit parked on a shelf, they lose value, except here the depreciation and physical maintenance are just eating your margins alive.
Yeah, it was a logistical nightmare. They grew way too fast. They couldn't manage that depreciating inventory. Customer service totally collapsed. Buyers were reporting severe mechanical failures, endless delays with government license plates. It was bad.
So that triggers the mass layoffs, right?
Exactly. The reputational damage was huge. It forced them to exit Colombia and Peru, and it plummeted their valuation to roughly $2.2 billion by early 2025.
Okay, wait, I'm genuinely confused here. How does a company survive a $6.5 billion drop in value just, selling cars with shrinking margins? Are you saying their actual product isn't the car at all?
What's fascinating here is that the retail side buying and selling cars is strictly the hook. Kavak's current business actually has three pillars. You have retail, services, and fintech, specifically Kavak Capital.
Okay, let's unpack this. So they are essentially a bank disguised as a used car lot.
Yes. I mean, in Latin America, access to traditional auto credit is extremely scarce. Regular banks reject a massive portion of applicants. So the real goldmine for Kavak is stepping into that void, acting as the bank, and offering loans to people who are usually shut out of the system.
But they're offering high-risk auto loans to the underbanked. How do they not just, lose everything on default?
Well, the car they just sold acts as the collateral.
Yeah.
And it's physically tracked by GPS.
Wait, really?
Yeah. If a borrower stops paying their loan, Kavak knows exactly where their asset is parked.
Wow. So they just follow the ping and take it back? That completely flips how you look at those massive, flashy car lots.
It really does. And armed with this fintech focus, they just secured $300 million in a Series F funding round in February 2026.
Led by Andreessen Horowitz, I think, which is huge because getting late-stage Series F money after a massive crash, investors actually believe this new fintech model works, but how are they avoiding another inventory trap?
Total discipline. They're shrinking their global footprint to dominate just two markets, Mexico and Brazil. And they're heavily investing in AI for dynamic pricing.
Meaning they aren't just guessing what a car is worth anymore.
Right. Their AI predicts car values 6 months out. It analyzes macro trends, local demand, parts availability, all so they can price it dynamically and sell it before it loses its profit margin.
And they're also automating the soul-crushing bureaucratic nightmare of government paperwork, which is huge. Shifting from this arrogant startup to the quiet tech layer fixing your title transfer, that might just be their ultimate redemption arc.
Definitely. Kavak survived the whole unicorn purge to emerge as a humbler, highly efficient, tech-driven financial institution.
Which leaves us with a pretty wild thought for you to chew on. If a massive used car company's true value lies in acting as a bank for the underbanked, what other everyday industries are out there right now just waiting to be secretly turned into fintech platforms? Something to think about next time you walk onto a perfectly ordinary retail lot. Thanks for joining us on this deep dive.